Hello, everyone. Welcome to Next App Social. We are your hosts, Richelle Wright and Juwan Buford, and we believe entrepreneurship is empowerment and are committed to the development and progress of entrepreneurs, providing you with the information you need to build thriving businesses. So today we are very pleased to welcome Charleta McInnis. She is a former 2020 presidential candidate, current City of Detroit mayoral candidate, the budget manager for the City of Detroit for a long time, many years, and a business owner herself. So welcome, Charleta. We are excited to have you here at Next App Social. And let's dive in. Tell us a little about yourself, your background, how you got started with entrepreneurship. I'm excited to hear this story of you.
Now, Charleta, oh no, I gotta
Yes.
say something about this because I forgot one thing, a fact that Richelle mentioned. You have like tenacity for days. I just have to say that.
Yeah.
You have tenacity for days. I was like, wait a minute, did I just hear she's running for this position while working here? I love it. So I'm sorry, I had to go there because I just think that required a proper introduction.
Well, that's why I feel like it required to be said. It required to be said, definitely.
Yes.
All right. So the floor is yours.
Well, again, my name is Charleta McInnis. I've been born and raised in the city of Detroit all my life. I'm 51 years old. I'm a single mother of 3 biological sons, and I also have a son and a daughter that I had since they were 10 and 11. So I have 5 children. My youngest now is 17. The other 4 are all over 30. Being a single mother, I knew that wasn't, and a teen mother at that, and I knew that wasn't what I wanted for my life. I didn't want to be a statistic. So I made sure that I finished high school on time, went to college, got my bachelor's in accounting, as well as my master's. And as soon as I got my bachelor's degree in accounting, I started my accounting business. And like I was telling Juwan, when I first met him, when everybody else was going to H&R Block to get their taxes, I always went to a CPA firm to get my taxes prepared. And he was like, why? I said, because I knew that a lot of those other tax places, they just go take a class to learn how to input the documents, but they really don't know the basic laws or any type of laws or how you can help me save my money, help me save for taxes. So I always went to a CPA, and once I graduated with my bachelor's, and that's what I always wanted to be, have my own accounting and tax business. So I've been doing taxes now for the last 23 years. I was working out of my home, and just August of this year, finally purchased my own building. So I'm trying to expand it so I can be the next biggest thing besides H&R Block. And also, like you said, I ran for president in 2020 as a Democratic candidate. And also for 21, I ran for the mayor of Detroit as a mayoral candidate in the primary. And as well as I'm a licensed real estate agent and an accountant. So yes.
I love it. So Charleta, I'll tell you what really got me excited when we conversed before. Like it was horrifying, but exciting at the same time, right? When you share with me that every single year, billions of dollars are left on the table by small business owners in terms of deductions on the federal level. And then the cherry on top where I was like, okay, we got to interview her, is when in the midst of our conversation and listening to you, I realized that small business owners here in Detroit Metro, I mean, just the average Joe, the barbershop owner, the salon owner, the car dealership owner, even the attorneys and real estate agents, they're literally missing out on tens of thousands of dollars in tax deductions over the course of a 3-5 year period of time. Like I was doing the math as I was listening. I said, my God, I said, we got to talk about this, right? Because usually when entrepreneurs are talking about taxes, they're talking about it from the standpoint of trying to skirt taxes or try to pay less taxes or all this other stuff that people do, right? And I know we'll get to that. But when you shared with me about how these behaviors actually hurt them from the standpoint of deductions they could be enjoying, which as far as I'm concerned, that's money they could be investing back in their business, right? We talk about that 40% that went out of business, they'll never open their doors again. I know the majority of that 40%, they had an extra $20,000, $30,000 of spending money during the pandemic, they'd still be around. And it was because of these decisions. So I was like, you know what? We got to bring you on. We got to talk about this. Like I need the audience to hear, what are these mistakes that entrepreneurs are making? What is going on out here?
Well, for one, a lot of entrepreneurs doesn't know all the advantages for having a small business. If you have a small business, if you have a brick and mortar, make sure you also have a home office. So those expenses at your home, depending on the square footage of your home, the percentage, the square foot of your office, anything that you do in that office, your utilities, a portion of utilities are deductible. Your property taxes, your insurance, and any other type of repairs that or payments that you make for your house, that's going to help benefit your business. It may not be a direct expense to your business, but it can be an indirect expense. And so many people like to write off the maximum so they can pay at minimum of taxes possible, but at the same time, it's hurting them in the long run, because if they want to try to get a car or a mortgage, then they wouldn't qualify, because if you have a $300,000 business in income, but you writing off majority of it, you're only gonna have a $10,000 profit. When the banks look at you, they're like, well, you're only making $10,000 a year, so you won't be able to afford a mortgage or anything else.
Okay. One of the examples that I remember talking to you about when we were chatting was the guy that owned the barber shop. So he had the W-2, I think, working in the plant, but had the barber shop.
Yes.
And was, oh yeah. And that was like, I was like, okay, we got to talk about this. I know a lot of individuals make this mistake. Like, if you don't mind, like, elaborate on that. What was this gentleman doing wrong?
Well, for one, he really wasn't writing off any of his business expenses. Not knowing, you can write off, if you own the business, you can write off. If you own the building, you can do depreciation, all your utility, insurance, anything that you purchase for that business, down to every comb, every necktie, every hairspray, mop, brushes, brooms, anything that you purchase for that business, you can write it off as an expense, as well as magazines. You have hair books in your hair salon or your barbershop. All that is tax deductible. He didn't know any of that. He was like, no one ever asked me any of those questions. So he literally had to go back and just sit down and think about everything that he have purchased for his barbershop. And we had to do this. We had to do this every year.
And so one of the things you said in the beginning, right? And it's not to disparage individuals who own H&R Blocks. You know, you have these pop-up companies that are here for 4 or 5 months and they disappear, right? And a lot of entrepreneurs like to utilize them. So they feel like, okay, I go here, I get my tax return sooner. And as a result, you know, like you said, it's almost like dealing with a consultant that's read a book and watched one YouTube video, getting advice from them. They really, you know, the new broom may know some of the information, but the old broom knows the corners, right? How is that hurting the entrepreneur ecosystem, where you have individuals who are relying almost solely on these pop-ups?
Well, for one, a lot of them are doing, for one, if they're not signing your tax return, then you should not be going to them to get your taxes prepared. Because I know some, they will come to me, want me to do their taxes, and I'd be like, okay, well, I need all your hair salon lady, she was a hairstylist. I said, I need to know how much you pay in booth rent, or how much do you pay for supplies? And she was like, well, I don't know. I just would tell the lady who was doing my taxes before, I just tell I do hair, tell her how much my revenue, and then she just give me back my refund. I get like $6,000.
Oh.
I said, but you don't give her any expenses? She's like, I said, well, I can't do your taxes, because just like you just told me that you would tell the IRS the same thing and I'll be out of business. So I wouldn't recommend having no one prepare your taxes if they do not sign your tax return, because if the IRS have any questions, they need to be able to contact your tax preparer. And a lot of people don't. I mean, you go to H&R Block, they will go, the person there, someone there will sign your tax return, but they have $1 million. They're really not being charged for making a mistake on your tax return individually. The company is as a whole, but you want someone to actually know the different type of laws and writing off expenses. I have a senior that she will always go get her taxes done at the accounting aid society, and she would get her taxes done for free. And I started doing her taxes, and she was like, I have never got a refund before. And she was like, they never asked me any of these questions. They never asked her about any of her rental properties. She had about 6 different rental properties in Bloomfield, Farmington. They never asked her any of those questions. They just did her basic return, and she was on every year. So you just need to ask questions, and a lot of them don't. They just go off what you gave them, and that's it. I mean, if a person don't know, and if you don't ask the questions, they wouldn't know that there's something that they could be utilizing.
So one thing you mentioned at the beginning was and I know it's a much more complicated issue than we have all the time to get into, but it's this balance of writing everything off and not writing anything off, right? To figure out how to, really stand out as a successful business owner, and finding that balance, I know, is not cookie cutter, and it takes a lot of work, and that's why people hire you for sure. But I mean, what is if there's any basic advice or how people can kind of get started with that? Because I do think there's this mindset of people start businesses with this like, oh, I can just write everything off and then I'm not going to owe anything, right? But then, like you had mentioned, the flip side is like, well, maybe you're writing things off you shouldn't be writing off, or maybe you're writing things you're trying to do something with all that, the money you've written off, and now it looks like you have no money. So How do you kind of work with people of like finding this balance a little bit?
Well, for one, for small businesses, I always say, pay yourself. Get with a payroll company or your accountant, let them set you up with a payroll company so that when you're getting paid, you're also paying yourself first, as well as set up your own 401k. Make an investment, $5,000 a year. That's bring down your taxable income. So, put money in a 401k. You can put into, if you have a 401k, you can put up like 20,000 in there a year. For your, so that's 20,000 that you're paying yourself that's not being taxed.
Yeah.
So, a lot of people don't know that.
So you're sharing something that I know a lot of entrepreneurs, big mistakes, right, that they make. I just worked with several, helping them put together business plans. And the thing that I've seen time and time again when I'm reviewing business plans is there's never a line in there about how much they're going to pay themselves, right? Expenses, everything else is accounted for, but there's no place in the business plan where I'm going to distribute this amount of money to take care of my family. And of course, that's a red flag, right? To anyone that's in the finance industry, it's like, okay, this is the problem, right? What are some of the other mistakes that you see individuals make that are really problematic when they're starting up their businesses, when they're beginning to gauge the issue of taxes and accounting for revenues? What are some of the biggest mistakes you see people stumble upon?
Make sure you're categorizing your expenses and what's a liable expense for your business. Well, like trucking companies, that you have, the majority of trucking companies, they usually spend half of their income in fuel. But then if your meals, if you're just buying lunch, that's not tax deductible for yourself. But if you're over the road and you're spending overnights, then you should be having a per diem rate that you have a per diem rate for your dinner and your meals. That's something that that's the only amount that you're allowed for a meal, so you can't go over. And like right now, usually we would have entertainment expenses. You would buy season tickets and be able to splurge on things like that. But President Trump eliminated for us to be able to write off entertainment expenses or having big parties. Now, the only parties that you can write off for your businesses is like a Christmas party. So if you say, I bought meals for my employees, that really don't count anymore. except unless you're giving a Christmas party for your business. So
Wow.
it's
So
different.
I can't buy Pistons tickets for the team and write those off.
Not anymore.
Wow. Well, I know a lot of people need to hear that. I'm glad that came up.
Yeah.
Okay. All right. What are some of the other issues? The ones that people don't think about but happen on a regular basis.
If they're using a personal vehicle, if you're using your personal vehicle, if it's a purchase, then you can depreciate your vehicle, and if it's a lease, you can deduct your lease payments based off of the percentage of you using it. So if you bought it specifically for your business and that's what you use it for 100%, then 100% of your lease, your car insurance, any repairs, your gas, your tax, depending on what you're using the car for. If you're using it for clients, so you need your car washed. If you're getting your car washed once a week, every 2 weeks, however, all that's deductible. Any type of repairs, tires, anything that's going to benefit your business for that using that vehicle is all tax deductible.
Mm-hmm.
That people they don't keep track of their mileage or anything. So I'd be like, I need you to figure out this vehicle, because this is something that you can utilize that's going to bring down your taxable income.
So
especially if you have another job where you may not have as much taxes coming out of your regular income of your regular job. Anything that you're using that's going to benefit to bring down that taxable income is a benefit.
So I've been reflecting on this a lot lately. I've been hearing a lot of other entrepreneurs, fortunately, because of the internet, I think small business owners are starting to become a little bit more savvy. I think it's starting to trickle a little bit into the community where people are starting to understand how they can leverage their business to buy vehicles, how they can leverage their businesses to buy property, how they can utilize their business as vehicles to kind of cover these expenses, right? But I also know that's treated differently, right? Versus you being a sole prop LLC, you're receiving revenue, you're writing these expenses off after the fact, versus if you have an S-Corp or LLC and you're buying cars in the business name, you're buying a rental property or a commercial property in the business name. Like, how does that work? What's the impact at the end of the day?
Well, if you're buying it with the LLC or S-Corp, if you're buying the property, you can purchase it, whatever you purchase the price for, you can deduct the entire amount, or either you can do a 179 deduction on the property, or you can just purchase it and have depreciation for up to 27 years. So you want to make sure that you can have that depreciation every year. So that's something that you will know that will help you reduce your income every year for that property. Or if a car, you can write off the entire amount of the car, or you can take a certain amount of that cost if you want to depreciate it over the life of that vehicle.
So wait a minute, because you bought it in the name of the business, you can do that?
If you bought it for business purposes, period.
Period. Okay.
Period.
So I'm getting excited about that because I have an idea of what that means in real dollars and cents. But quantify that it is for people, if you don't mind, Charleta. Like, what does that mean over the course of 5-10 years? Just making that decision.
So like if you have a job, as well as being an entrepreneur or have a side business, you may not be, some people file exempt. So they get the majority of their money with their job. But now for their own personal company, they buy a car for $50,000, $100,000. You have the option, if you want to write off that whole $100,000 as a business expense, or you can take 20%, 50% in that one deduction. That will cut that $100,000 salary in half, and you can depreciate it over the next 5 years, the balance, and you will have a deduction every year.
So it's like banking your deductions.
Yes.
In layman's terms, that's what you're basically doing. You're just saying, look, I don't want to take the full deduction now. I'm gonna bank this over the course of time.
And you can do that for your vehicles. You can do that for your rental properties. You can do that for computer equipment, depending on the price. Like if you buy a $5,000 printer, you can expense it, or you can either deduct it over the life of that copier or printer.
I like it. I like it. I wanted to use this time to kind of touch on some things I know most people don't talk about, right? But at the same time, I know some of these simplistic mistakes also become issues like commingling money, right? Yeah, you know, you know, and look, I personally, I don't judge people on it because look, I think most entrepreneurs when we get started, we do it, right? Most entrepreneurs when they get started, they don't know any better. So you're just happy to earn a couple bucks. You want to go celebrate with friends. Well, you just commingled your money. You just, you know, took house money, business money, and you spent it on something you shouldn't have spent it on, right? You want to turn up on Friday and buy the dress and lipstick. Okay. Well, now you just cause yourself some problems potentially if you develop that habit long term. Talk a little bit about that. Like if a person has already made that error in judgment, whether it be for a day or whether it's been for a year, like how do you extricate yourself from that situation? How do you make things right?
Well, as soon as you start your business, the first thing you should do is once you get your federal tax ID number and your assumed business name or your LLC paperwork, you should be going to a bank or a credit union and open up your business account. Because that's one of the questions for the IRS is, do you have a separate business account? And if you do know, they're asking you, well, how can you differentiate your income from your personal and your business? So that determination can eliminate you from getting your child tax credit, your earned income credit, things like that, especially if you're using your business as earned income. So they can decide that, okay, I wouldn't consider this earned income because you can't differentiate your personal income from your business income. And if not, they want to know, how can you? So that's why people need to be detailed when they're doing their taxes. Make sure you have a business account because like now, with all this money for these SBA for the pandemic, that's why a lot of people wasn't able to get the SBA loans, the EIDL loans, or the PPP loans because they didn't have a federal tax ID number and they didn't have a business account. So that's one of the things they want you to have a bank account in the business name, as well as they want you to have a federal tax ID number. And they wanted you to be in business in 19 before 2020. So that's how a lot of small businesses didn't qualify unless they did something fraudulently.
Now, I know a common mistake that I hear in Detroit Metro. I don't know how widespread this is, but you have a lot of people, they'll go online, they'll watch the YouTube video, or quite frankly, they'll talk to someone who doesn't know what they're talking about. They will create a name for their business. They will go downtown and get a EIN, a tax ID number.
They don't get that.
They'll try to, right? They'll get a DBA number, right? And they think that's a tax ID number, by the way. A lot of people do that. Then they'll find, you see you're shaking your head, right? This is what I run into in the field. And then they'll figure out, okay, well, I have this DBA number. I'm going to take this DBA number. I'm going to go to irs.gov. I'm going to get a tax ID number for an LLC, but they haven't filed with the state of Michigan for that LLC. I know this is going to catch a lot of people. Talk about this, why this is problematic, Charleta. I'm going to use what you're about to share, and I'm going to broadcast it everywhere. Because I'll tell you, I mean, literally 3 out of 10 business owners I come across here in Detroit Metro have done that. They've gone to they've gone to the county to get the DBA set up. They get this number. They go to the irs.gov site. They utilize that information to get, and what they're thinking they're getting is an LLC EIN number. Why is that problematic?
Well, getting your DBA, that's just setting up your name in the city that
Mm-hmm.
you're setting your business up in. It's not no particular number. And once you have your assumed name,
Mm-hmm.
you can go to the IRS EIN and set up and fill out the paperwork to get your federal tax ID number. But that doesn't state that you're LLC.
Mm-hmm.
And you don't have to be an LLC, but if you want to make sure that if you operate in a business that's providing a service to someone and you don't want to be sued for your personal assets, then it's best to have an LLC. So to be able to do that, you have to go through the state that you live in. So for Michigan, you will go to Laura, Michigan.gov and Laura, and you will set up your business as a limited liability company. And you can be a sole proprietor and still set up an LLC. You're still a sole proprietor.
Mm-hmm.
You can do a partnership LLC or a corporation LLC. But just because you have LLC doesn't mean that you write it on your paper mean you're actually a limited liability company. You have to apply with the state, as well as you have to pay your $50 to become an LLC for the state of Michigan. But you can have a business without setting up an LLC. But the LLC is just a covenant to cover your own butt.
So what happens to the business owner that doesn't understand this? They went downtown, they got their DBA set up, they went to the irs.gov site, acquired an EIN, they're running around telling people I'm an LLC. 5 years down the line, some BS.com hits the fan. What's the impact?
Well, what's the impact is that if you were to get sued, your business were to get sued, you're going to get sued personally. You'll be personally liable for that lawsuit.
Mm-hmm.
LLC, they only can sue your business for whatever assets your business have. So if your business don't have any assets, then there's nothing that they can sue you for.
Mm-hmm.
So that's the main benefit of having an LLC. And so everyone, make sure that you set up an LLC, or if, like I said, if you don't have an LLC, you don't have to, but you can make sure that if you don't have the LLC, you're doing everything possible that you can cover your own butt.
I mean, isn't it I've never understood that. I've never understood. For me, it just makes it easier. You set up the LLC, you have the revenues going to the LLC, you have your business checking account, the LLC's name, you have your personal checking account. I mean, the reason why I've been a huge advocate of people set up business entities, whether it be LLC, S-Corp, et cetera, is because it just simplifies everything, right? I have a client who shall remain nameless, been in business for 20 years.
Mm-hmm.
And they had been operating as a DBA for 20 years, which kind of blew my mind because I know what industry they're in. It's highly litigious. And I would talk to the client probably 3 times a year, and they'd be going crazy trying to balance their books and separate receipts and going through like mounds and mounds of statements to figure out what money went here, there, and other. I'm like, will you please just set the LLC up? It's only a $25 annual filing fee. Just do it, right? In my mind, doesn't that just make sense?
But even though you set the LLC up, they still will be going through that if they don't have particular bank accounts, and as well as debit cards, debit cards or credit cards that they're using specifically for the business. If they're still using personal credit cards or any other type of bank account and commingling funds, they still gonna be going through the same receipts trying to figure out what's for the LLC or not.
Right. But if they have the business entity set up and they have the business entity account, the money goes in there, and then they pay themselves out the account, and they only spend the money they pay themselves on the personal matters. I mean, in my mind, doesn't it just simplify everything? Just do it that way.
Yes, it would.
I mean,
it would. But a lot of people not gonna do it that way.
Yeah. And then of course, for me, and I'm once again, I'm not knocking it. I guess I'm just old school. But you got the PayPal account. Now everybody's in the Cash app. Now they have Chime set up where you can have transactions coming from 3 and 4 different places. I know
you can
some people.
You can set those accounts to go to your business accounts.
Yeah. But what people are doing is they're just accepting the money through PayPal and doing whatever with it. Sometimes they're putting in the business account, sometimes they're not, or they're doing it with Chime. What's the other one that's out there? Because it's so many, I can't even keep up with them.
Venmo.
Oh my gosh, yeah. I know someone who has like 10 different Chime, PayPal, Venmo cards. Like, what are you doing? Like, no, don't know. I know
So
that's got to be like the
calculate that
headache of all
revenue.
time.
They're gonna have to get all those revenue receipts, get an annual statement from each one of those when it's time for them to prepare their tax returns.
Mm-hmm.
So it would be good if they know exactly what service that if they're providing multiple services, if they're using PayPal for one service and Venmo for another service. Now that would help them. They can separate. They'll know that when they do their taxes for auto repair, they using Venmo, they using T-shirts, they using PayPal. If they doing different type of providing different services, and that's how they can differentiate the type of income that they're receiving. Okay, that's fine. But if not, and they go into multiple accounts, yeah, it's gonna be a headache.
So how do you extricate yourself from that? So you've made these decisions, you made these mistakes. What does the process look like in terms of righting the ship?
If they're all for business purposes, I would say make sure they're doing direct deposit into your business account and pay yourself so that you know that this income that you're receiving for the business is for the business, but you still making sure you pay yourself first.
Okay. So if I'm hearing you correctly, you've made a hot mess for the previous 6 months. Just decide today, I'm gonna start doing things right. There's no real way to kind of, especially, I mean, let's be real, because people aren't keeping up receipts and stuff like that. They're not. They're just spending, right? I mean, I know you don't want to hear that, but
she knows.
I have
in
envelopes and boxes full of receipts. I already know.
Yeah. So should a person try to go back 6 months and try to repair all that stuff? Should they really do that? Or is it just one of those things where it's like, let's start brand new and try to clean it up a little bit piecemeal at a time? Like, what does that process look like?
I would say it's the end of the year now. Hopefully by January, we can right the ship. But before January, before it's time to start preparing your taxes, I would recommend that they will go through each one of those categories. If it's office supplies, list out your office supplies. If it's auto repairs, list out your auto repairs. Don't just say this is auto expense. This is office expense, because that's going to be a way you're going to get audited. The more detail that you have, the least amount of audits that you will have. So try to categorize all your expenses into specific categories, and that will cut down on any audits or any red flags that you can provide the IRS. Be as specific as possible and start separating your costs as well as your revenue.
You said something that I don't hear a lot of people talk about. You talked about categorizing things and getting detail when it comes to the categorization of your expenses. Like that's important. I don't hear people talking about that often. Is there like a tool? Is there something that you give to your clients to say, hey, this is how you categorize your expenses. This is how you make my life easier to serve you. Is there some type of template that's out there that you're employing with people?
Yes, I will give my clients a sheet and be like, okay, and explain what will be an office supply and an office expense. So office supplies, paper, pens, ink, cartridge, separate that as much as possible, so that you just won't say office expenses. Say, okay, this is how much I spent in ink, or this is now pens, paper, something like that. You can put that together. For coffee supplies, try to put all your stuff that you buy for coffee for your customers' offices. Break that out. Office expenses is if you have any, and for your office expenses, I would list them. If you have any office dues, memberships, Different, if you're taking any type of classes for your occupation, if you went to any type of training, any fees, separate everything, contributions, separate your ties, separate any other type of nonprofit that you donated, list each one of them out separately, how much you paid for those. Just be as detailed as possible, because none of my clients in 23 years has been audited.
Okay.
Wood, knock wood.
All right.
I try to make sure we're as detailed as possible. And I have one client that want to have suits and gaiters as an office expense. That is not an office expense. That is not a uniform. That's not a uniform.
Oh my goodness. I was on a conference call that was sponsored by a city municipal or a civic organization, which shall remain nameless. And I heard one of the consultants on the call tell the business owners on the call, you don't need to understand your P&L statement. Just let the accountant handle that.
You don't need to understand.
Okay, your response was the same as mine. They were basically telling them, look, just keep up with your accounts payables, your accounts receivable. Just understand what's coming in and out. Let your accountant help you with the P&L statement. You don't need to understand that as a business owner. Talk to the audience. Why is that some of the most fallacious nonsense? Let me put it this way. I thought that was the most fallacious nonsense I ever heard in my life.
You want to know where your business is standing at all times. You want to know exactly how much money is coming in and exactly how much you're spending out. And what areas are you spending out in?
Mm-hmm.
Because
talk about it though, because for the first person that's hearing this, right? Because that's what I was concerned about. It was 30 business owners on the call, and you have a tax and accounting professional telling individuals you don't need to understand your P&L statement. Number one, I knew 70% of the individuals on there listening didn't even know what a P&L statement is. Take a moment, break this down for individuals so they get it.
If you as an owner don't know your profit and loss statement, you're setting yourself up for fraud. Because anybody can steal your money. You wouldn't know. If you don't know how your money coming and going, anybody can come in and start just posting expenses to your profit and loss, and you're thinking you have legitimate expenses. In actuality, you're not.
What is a profit and loss statement? I mean, we're talking academically here. Like Rochelle and I, we know what it is. But for the person that's never heard that phrase before, exactly what is the profit and loss statement?
Your profit and loss breaks down all your revenue resources that comes into your business, as well as all your expenses that is spent in your business. And it's categorized by your chart of accounts from your phone, payroll, expenses. It lists everything that's paid out in your business. So it tells you what your income, what your expenses, and what your net profit or loss is. So you'll know you can do it monthly, quarterly. It's best to do it monthly if you can, but it's time consuming, depending on how many chart of accounts and stuff that you have and how big your business is. But quarterly, definitely. So you can see exactly how much money you're bringing in on a monthly basis. And it can tell you what expenses that you may need to cut back on.
So within those categories, you have what? Income statements, balance sheet, growth statement, right?
Cash flow.
Yep, the cash flow, or some people call it a cash flow statement. What does each one of those documents mean? Why are they important? Like, what is the balance sheet? Looking at your balance sheet, what does that tell you about your business? Looking at your cash flow statement.
Your balance sheet tells you what your cash on hand is, what your assets and your liabilities. And it tells you what, like if you have any loans payable, where you stand on your loans, your assets and your liabilities and your return earnings should equal. So whatever your cash is, your accounts receivable and your cash on hand should equal what your liabilities and your retained earnings are. So if you accounts receivable, any service that you provide, and you have people that still owe you money, that will be your accounts receivable plus your banks, what you have in your banks. And then your liabilities are everything that you have payable. Any payrolls payable, any loans payable. If you have a business, your mortgage payable, all that, you can see exactly where you stand, and you will be having your accumulated depreciation on there as well. So every month you will see exactly where you stand at your balance sheet. Your cash flow is where you stand with your cash, how much money is coming in and out your cash flow. So you can stay on top of how much money you have to invest or pay out for yourself. And you always want to stay on top of your income. That's on how you gonna know where you're going if you don't even know where your cash came from.
Mm-hmm. So there's a business owner I'm thinking about now. The guy has been like a brand in Detroit Metro for the last 30, 40 years. Done very well for himself over the years. And I was trying to have a conversation about that. He was talking about, well, I want to turn the business over. I want to sell it. And, so me being me, I was like, do you trust me? He says, yeah. I said, good. So let me see your P&L statement. Of course, he kind of pauses. Yeah, I see the eyebrow raised immediately, right? I said, let me see it. And he couldn't produce it for me. And what I wanted to explain to him clearly is like, look, these statements aren't just important for you, but they're important for the people that you plan on turning your business over to. It's important if you plan on selling your business. Like Rochelle and I were just having the conversation about that, right? Let's say you want to scale your business, because it's easy to fall out of love with what it is you're doing. But you've built this social capital, you've built, depending on the type of business you have, you've built assets, right? Quite frankly, your clientele, your income is an asset, whether people realize it or not, right? Your income is actually an asset. Like people will make decisions and evaluate your business based on that. But they're also going to look at your balance, right? Your balance sheet. They're also going to look at your cash flow statement. And if you don't have these things together, you have a hard time selling your business, right? And I firmly believe it's a problem. It's a huge problem, quite frankly, in the African-American community in Detroit Metro, because I know so many businesses that the business owner is going to pass away and there's value there that could be realized, right? The family could sell that business if those documents were in place. Or it could help with a smooth transition, right? Negotiating, right? Where maybe you stay on as a consultant, the other person assumes the business. I know there's certain tax consequences with these type of arrangements. But these discussions aren't being had because of this simple thing, which is why I'm harping on it so hard, if you can't tell, right? If you don't mind, elaborate on that a little bit. Like, what have you seen in your experience and why it's so important, and what happens when business owners aren't doing a deep dive in their business like this?
Well, there's a company, I know that now there was a renowned company. It was a company here in Detroit, but they ended up buying a business in Wixom. And they thought that this company was making all this revenue. And in actuality, their books were fixed. And when they got in there, they wasn't making the money that they thought that company was making. So they also went under when they bought that business, because they didn't do the actual deep dive into the company that they was purchasing. They was just going off of their profit and losses instead of actually going in yourself and have those books audited to make sure that the income that they're saying that they were receiving. So, if you're purchasing a building, you want or a business, you want to make sure that their profit and loss and their balance sheets are accurate, and that they're not in a deficit. And because you're buying a dead business because they're not making the profits. So for yourself, you want to make sure that your business is profitable. And if you want to sell it, you want to make sure that your books are in order, so you can know what your income is and your annual revenue. so that if your kids, like you said, if I were to pass, my kids decide they want to sell my business, they want to know exactly what they can sell it for. Because years ago, H&R Block wanted to buy my accounting and tax business. But no, I still like helping my people. So no, I wouldn't sell. But yeah, you want to make sure that you have your stuff in order.
Mm-hmm. Michelle, I've been dominating discussion. You know, I have like a million questions. I'm just trying to figure out like
No, I
whether or
think
not to
that
get
this
technical
is,
or not.
well, I think you start getting technical, it starts getting specific, right? More specific to everyone's needs. But I think that this has been such a good conversation, especially timely with it being the end of the year. And nobody wants to think about these things, but now is the time. If you've avoided it all year, you need to start thinking about it, right? And getting things in order to make it less stressful moving forward. But I think what is important that I know, which I hope people take away, is that you can turn it around, right? If you've done things wrong, if you've been listening and you realize I've not been doing this the right way, I need to fix this. The good news is that we have Charleta's information that we can send to you as well, but that it is possible to start on a better foot and move it forward so that you don't have to continue stressing about this in complicated ways. Because I also know, I was a sole proprietor for so long and I definitely went into it messy, but then once I was able to have the right people in place to help me guide that way, it doesn't become an overly stressful weighing problem,
Right.
once it is on that right track. So yeah, I hope that message has also got across that, we've dove into a lot of different scenarios, which I think is super important because there's probably someone listening who's had one of these scenarios, right? Or has had one of these issues. You can turn your scenarios around.
Well,
You can.
what tools would you recommend, Charleta, for individuals that, like me, absent tools, I couldn't keep up with it all. Like I have to have tools. Like I have my Stripe account set up a certain kind of way. I try not to use Cash App and PayPal. I just can't keep up with it all. It's too much of a headache, right? But I have certain tools that I use to make sure the money ends up where it's supposed to end up and business expenses are accounted for versus personal expenses, right? Like what tools do you recommend to individuals? Like, one that I'm a huge fan of is Shoebox, right? So for people who are messy, you can take your receipts, throw it in an envelope, send it to them. They'll itemize it for you. They'll break down the expenses for you. Really inexpensive. Like if you're just a messy person, but you do collect the receipts, Shoebox will kind of organize your stuff and get it together. Are there any other tools out there, I guess, you would recommend that individuals take advantage of before they come and see you?
Well, there's a app. There's a couple of apps that you can use on your phone to track your mileage. If you don't have an app, get Excel. Just list out everything that you spent for your business on a daily basis, and then do a tab for each month and just calculate what you spent it on. Have different columns if you use for gas, office supplies, just something simple, just so that you can keep track of it, so that at the end of the year that everything is in one place, and all you do is print out the spreadsheet, and that will save a lot and help individuals out tremendously.
Yeah,
Because
and that
everybody don't
doesn't
know how
take
to
a
use
ton of
that.
time, right? Like it takes a couple minutes a day, if that.
That's it. Yes.
Mm-hmm.
And if you're not computer savvy, then get you a spiral notebook and do the same thing on a daily basis. Your income as well as your expenses, what you made every day. If you're a barber, keep track of your appointments, your names, how much they paid, and you can keep track of that on a weekly basis or a monthly basis. Just go through and add them up, and you can keep track of them. So everybody,
I like it. I have so many questions, Charleta. Like I can really go in on this topic. This stuff is like I think about it more and more and more because a lot of this, I mean, I keep thinking about that statistics, right? And I don't like to think negative. I like to always be forward thinking and positive and optimistic and what people are capable of. But when I think about that 40% that went out of business during the pandemic, I know a lot of that 40% would still be around today if they were just doing some of the simple stuff, right? And that's why I thought this conversation was so important. Whether it be the maximizing deductions, whether it be understanding what your business is actually worth, what it's really evaluated at, how to watch the books, make sure you don't make an error in judgment. Like I'm sitting here thinking to myself, when you mentioned that business owner on Wix, I'm like, Charleta, do you not know the same person? Because I know someone that actually invested in a restaurant, was using the other person's books to kind of ascertain whether or not it'd be a good investment, and they didn't scrub them. They didn't audit them. So it looked like the restaurant was profitable, looked like it was a good business ideal, and then they end up getting into the business. And then, of course, it's a pandemic on top of that. So hard to find workers, all that fun stuff thrown in there. And it ended up becoming a hot mess, right? Mm. And I've seen it happen so many times. So I have a million questions, but we try to keep this as tight as possible. Michelle knows I will go down a rabbit hole and start asking a whole bunch of other stuff too. So I know when individuals come to you, you want things to be in a certain order, right? I know from talking to CPAs and talking to those in the tax and accounting industry, you end up getting taxed, pun intended. You end up getting taxed and charged a lot of money because you don't have these things in order. You just come in with your box receipts, help me fix my situation, right? What do you want people to have? They call you up, they want to meet with you via Zoom, or they want to walk to your office February, they want to take on your services. What type of documents, how do you want people to have their affairs in order before they sit down with you?
Oh, that is, that would be the holy grail if they would do it correctly. But long as you have it broken out in your, just detail, just give me detail. Just don't give me a list of you can give me your income and however, as long as you give me a total amount of your income, but in your expenses, I would prefer them to be listed out, what type of expense it was. And if it's a capital item, which you spent over $1,000, if you want to depreciate that, I need the type of item that you purchased, the date that you purchased it, the name of the item, and the amount, so that we can know exactly if you bought a car. I need to know year, make, and model, the date that you purchased it, the amount that you paid for the car, and if was it new or was it used? And okay, yep, I need that, so that we can know if we're going to depreciate it for how many years and how much we're going to depreciate it for, if we're going to do an upfront depreciation, or are we just going to do the full depreciation over the life of the item. Auto expenses. I just need you to list all, don't just tell me auto expense. How much you spent monthly or annually for your insurance, how much you spent for oil changes, how much you spent for new tires, if you bought new tires. If you, don't say repairs, I need to know, did you get brakes? Did you get a new alternator? Did you get a radiator? I just need, list them out, specific categorizations of all your expenses. That will help me and you, because we want to make sure you don't get audited. Because if you do anything, say miscellaneous expenses, you're going to probably end up getting audited. So you need to break out as much as possible.
So now as we get to the end, as we get towards the end, there is a few questions though that I think will help wrap it up. Even though I know we could talk about this for 100 hours, but one thing we always ask our guests are, what would you consider your superpower to be? And I think you might have already answered this already, which is that in 23 years, none of your clients have ever been audited. But, I want to, from your perspective, especially as an entrepreneur, someone who's been, a multifaceted entrepreneur and from all different angles too, what would you consider your superpower to be?
My superpower is being detailed and asking questions and making sure, just being an accountant and knowing that what the laws, gap, they tell you, they look down on people putting down miscellaneous expenses. So I already know that. So that's one thing. I'll make sure that we're not doing miscellaneous expenses. Make sure that we categorize everything, because if you put everything down and you have the backup for them to be able to look at it and you have it readily available, you don't have to worry about anything. But if you just put a lump sum of something and they can't differentiate what exactly is included in that, then you're just putting up a lot of red flags.
Yeah.
And just letting people know that if you do not file taxes, the IRS gonna file your taxes for you every year, regardless if you file taxes or not. And they're gonna file you as single with no dependents, no deductions. So, people like, well, I ain't filed 10 to 20 years. Well, your taxes are done. But they'll wait till they rack up to 100, maybe close to $100,000, then they'll send you a bill. So then I have to go back all those years to correct them. But you're only going to get your refunds for the last 3 years if you are allotted a refund. But you will still have to do the adjustments for all those years and get all your documentation and fix your taxes.
Hold on, you just said something. I gotta touch this. So let's say hypothetically 20 years are going by. That's the number you used. You end up being audited and you have not filed taxes in over 20 years. You can't maximize deductions and get your refunds beyond 3 years. Did I hear that correctly?
Yes.
So you really are better off just saying, okay, let me not wait for this deduction. Let me go ahead and get to work on this right away. Because by the time they audit you, you're not gonna be able to do any of that. Am I hearing that correctly?
You're not gonna be able to get it. I had a client, I had to go back to 1999 and do their taxes. And she was getting refunds for all those years, but she only got the actual refunds for the last 3 years. So she just gave up almost $20,000 in taxes and refunds because she didn't file her taxes in time.
Which would have offset any monies that she owed. Okay.
Well, they had her owing almost $100,000. So once I did her taxes for each year, she just didn't do them. She had businesses. So she had payroll documentation. She had everything so once I did her taxes for those years that they said she was owing, she ended up getting refunds, but the refunds just cut down on what the IRS said that she owed, but she didn't actually get the refunds herself. They just cut down on what the system said that she owed. But she just left all that money on the table.
And then I'm hearing that if you don't file, they're being filed anyway.
Oh yeah, they're gonna do you as single, no dependents. So you can have children, you can be married, but you're gonna be single, no deductions.
Okay.
Charleta, how can someone learn or reach out to you if they've watched this, they're ready, they want to get to work with you? What is the best way for them to contact you?
They can contact me at 313-598-3900, or they can contact me on my website at www.cumaccountingservices.com, or they can contact me on yelp.com, or they can contact me on Facebook at CUM Accounting Services.
Perfect. Well, thank you again. We appreciate you taking the time this evening to join us here today. We're going to put that contact information in the links below in our description and our show notes so that you can contact Charleta further and get your books in order. And we'll be continuing this discussion in our Next Stop Social After Show group. We're going to pose some questions to our group and see people are paying attention a little bit and have listened in, and if they've taken away some tips as well too. That link is also going to be in our description. You can head to Facebook, go to Next Stop Social, click community, and we'll be happy to have you inside. So don't forget to hit that subscribe button here on YouTube, or visit our website at nextstopsocial.com to learn more about everything we do. And if you love today's episode with Charleta, please, please, please make sure to share it with someone who can gain value from this as well. Thank you again so much. We appreciate it.
All right. Thank you for having me both.
Yeah.
You both. Thank you. I appreciate it.
Thank you.